Hey guys, welcome back to another video. Today we'll be taking a look at Spotify. So as always, starting off by looking at their PE ratio, they currently do not have one, which is never a good first sign as this tells me they are not profitable right now. They also don't offer any dividends, which is expected for a company that can't even pay themselves right now. Getting into the income statement now, let's start off by looking at the revenue. As of the most recent year, they're bringing in 11.43 billion, which is very impressive as it's up about 6.82 billion from 5 years ago. Now, with their net income, it's looking really rough. There's a lot of ups and downs going on, and there's no signs of improvement in this, which is something you never want to see. So, the last thing to look at on the income statement is the shares outstanding. So, this is something you want to see have decreased. The more it goes up, the less your shares are worth. And as you can see, it's up from 2017 by about 10 million. So, hopefully, going into the future, they'll start buying back some shares. Moving into the balance sheet now, we're going to take a look at the current assets. So the current asset growth looks good as they brought this up to 4.97 billion, which is an increase of 118% from 5 years ago. Now with their current liabilities on the other hand, as of 2021, they're at 3.67 billion, which is nice as they have about 1.3 billion more current assets and current liabilities. Last and one of the most important aspects to look at in any company is the free cash flow. Cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. As you can see, it's pretty solid. It's up over the past 5 years. 2020 seemed to hit them pretty hard, but it looks like they're starting to recover from that. In conclusion, Spotify has some average financials to me. When it comes to their income statement, their revenue looks great, but we really need to see them start improving on that net income and to start buying back shares soon. Then, when it comes to the balance sheet and cash flow statements, they look pretty solid. When it comes to buying the stock, I think the $120 range is probably the most ideal if you really want to put money in. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I'm not a financial advisor. I'm just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.